Good morning, investors and traders. In today's segment, I'll be talking about how to spot the bottom in Bitcoin because, of course, the sell off in the Bitcoin prices continues. Now, the question for investors and traders is, are we going to see the bottom in Bitcoin prices at the recent support of 30,000, or if the prices will continue to move towards that 25,000? How to really find that bottom, that is what we'll be discussing. Before we do that, as always, it is important for me to go through this brief disclaimer, which is right in front of you. Now, guys, briefly about a background about myself. I come with 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon, as an equity trader with Bank of America, and currently providing services as a chief analyst to EverTrade. Now, what we are going to discussing in this particular video is how to spot the bottom in Bitcoin price, because Bitcoin price came into this area right over here when that massive sell-off happened a few weeks back, and now of course the prices are coming back into this area. Now, given the fact that the price did come into this area, and which was very much in line with the previous area of support. And by the way, we did mention that the prices are likely to come into this area. And if you wanted to see that video, that is right above. The link is over here, so you can see that. So now the question really for investors and traders is, are we going to see the bottom forming over here? Meaning, is the price going to come into this area and bounce back up from this area? So let's say come into this area and then moves back to the upside, or are we going to see this current sell-off which came over here and then bounced to here, then again it came over here, bounced over here, and now it is coming back into this area? Are we going to see this bounce like that is happening like that, or are we going to go into this area of support, which is right over here? So that is the major question for investors and traders, and that is what we're going to be very much discussing in this video. Now, before we do that, just a bit of a disclaimer, folks, that anything which I'm going to discuss cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own advisors. Now, on the daily time frame, we have three important moving averages. This is your 50, followed by that is your 100, and finally your 200-day simple moving average. If you have seen any of the previous videos, as always, the concept remains the same, that these are the moving averages which are looked at very closely by institutional traders. So as long as the price continues to trade above these moving averages, we know that the bulls are in control. And when the price begins to drop below them like it did, we know that bulls are no longer in control of the price. And when the price starts to trade below the 200-day simple moving average, as like these ones, then we know that the prices are oversold. Yes, bears are in control of the price, but the price is also oversold, meaning we are likely to see a bounce back in the prices. Where that bounce will happen, we will of course discuss that in a bit. But for the time being, the prices are trading below these moving averages, and this is confirming to us that the bulls are no longer in control of the price. Something also important that we need to discuss at the same time is that the price find some sort of a support when it approaches near its 50-day simple moving average, like it did over here, like it did over here, like it did over here. And the same concept goes for the 200-day simple moving average as well, when the price did come and we did see this bounce. And with respect to the 200-day simple moving average, we did not see that at all, because the price continued to move lower, and it only came into this area of support before it started to move back up, and then it's challenged the 200-day simple moving average. Now, of course, guys, if you like the content of what we are really teaching in this one, please feel free to smash that like button. Now, then we're going to move on to the next important point, and that is that if we're going to see the price moving back above from this current zone. Now, in order to see that, what we are likely to see is we're going to focus the lows of this particular candle, and we're going to see if the price is going to form a double bottom like this over here. A double bottom is a very much of a reversal pattern. It's a bullish pattern because once it is formed, the price is really kind of takes off from there. However, the chances of this happening are little. Why? Because the price did retest this zone very quickly, and now the fact that the price didn't even come close to its 200-day simple moving average right over here, the chances are that now the price is very much going to pierce through this zone, and we are likely to see a move into this zone, that 25,000 to 27,000. Now remember, at this area, the price would have lost 75% of its value from its all-time high. This is something that also happened back in 2017 when the crypto winter hit the market. The price dropped by 75%, and now this particular area is really that sort of area where the price is going to be losing a 75% of its value from its all-time high. So this really represents a massive opportunity. Now, in order to see that sort of whether we are going to see that there is a bottom, what we're going to see is we're going to keep an eye on the RSI. We're going to see, is the RSI going to form a lower low than its current low? Because recently this was the low that the price is very much focused on. Now we are seeing higher lows forming, but we're going to see is if the price is going to come into this area which is in line with the previous low, or if the price is going to go and then touch this line, this horizontal line, which really sort of represents to us that this was the all-time low for since 2017, and after touching that, the Bitcoin price really bounced sharply higher. So the answer to our question is very much coming from the RSI and from the price. So if the price comes over here where the RSI will be, if the price continues to stay within this one where the RSI will be, because if the RSI doesn't begin to drop to the downside, then really the chances are the RSI will continue to move higher, and that means that the prices will also continue to move to the upside. So that is going to be our sign of that, seeing whether the bottom is in place. Now, of course, guys, markets do change rapidly, and that means that you need to be aware of that, because the analysis that we have formed today is valid today, could be valid for the next few days. But if there is a rapid and a significant move in the market, that means you need to be updated with the new market knowledge, and for that you need to subscribe and hit that bell icon button, because by doing that way it gives you notification that the new video is uploaded, so you are aware of the very much of the new price action. So to conclude, overall the bulls are no longer in control of the price. The price, number two, is the price is way oversold. Number three is there is a probability of the price forming a double bottom. Number four is that that double bottom may not form that strong because the price has tested these areas quite a lot fairly recently. Number five is we're paying attention to the RSI very closely. We wanted to see if the price is going to retest its previous all-time low, or whether the RSI will continue to form higher lows, and that will be an indication for the price to form a bottom in terms of the price action. All right, folks, that's all for now. See you guys next time.